Hello, I'm Shaun Richards of Not a Yes Man's Economics, and today's topic is the money supply. And I'm going to illustrate it with examples from the Euro area and the European Central Bank. The reason for this is that we're seeing some quite extraordinary numbers here. For example, the narrow money supply is up 13.8% on a year ago. Now, that's already a money supply that's been inflated by past action. So it's 13.8% of something that was already a lot. Now, what does this mean? Where does this come out to? In ordinary times, a boost to narrow money shoves the economy forwards about 6 months after. Maybe a little more than that, but that sort of time scale. So the catch is, though, that we should be beginning to see that now because this started in March. We're now in late October. But the problem, if we stay with Europe, is the issue that we're seeing so many lockdowns now. So the economy in certain areas is being squeezed. For example, at the bottom end of the situation here, sadly, Belgium seems to be in quite a mess. Even at the upper end, somewhere that seems to have dealt with the COVID-19 pandemic relatively well, Germany is now looking at closing bars and restaurants, which will have an impact on the economy. This is a modern world example of something that economists used to call, and some still do, pushing on a string. So you have the monetary action here, and we've seen M1 growth that I just discussed. It really is a sort of boom, if I can put it like that, except maybe the fourth quarter we'll see a contraction now because of the restrictions I just mentioned. Now, this feeds into something else. People often ask me about velocity. People have looked at that. And this is trying to look at the relationship between the money supply and then economic output. Now, the numbers will look dreadful in the second quarter of this year because we saw a boost to the money supply, but economies contracted. There'll be a rebound, third quarter, the quarter just gone, but not getting us back to where we were, except the money supply a lot higher. So again, velocity in trouble. Now it seems quite possible we'll see a contraction in the last quarter of this year, with money supply booming even more. So we've been through a period where velocity has been very low, very weak. And in fact, perhaps the word collapse looks like it might be relevant for 2020. Looking ahead, at some point, there'll be a boost from this. But of course, whilst we keep locking down, it's hard to say. If I now widen out the perspective, we're seeing a similar pattern for broad money, what's called M3 in the euro area. That tends to feed in a couple of years ahead. So there's a possibility here, of course, of that happening. We don't know what the virus will do by then. But at 10.4%, that is quite a push. And that's the issue for those that, looking ahead, are afraid of inflation. At least according to the official measures, we don't have much now, but in a year or two's time, we could see quite a push. As the ECB takes its inflation target relatively seriously, we'll have to see how that plays out. But this is a very unusual situation. And in fact, that we see economic impacts from money supply moves ordinarily. And this is another side, if you like, of the government spending, and then the European Central Bank replying to that by expanding its balance sheet, in essence buying the bonds that are being issued, and then supplying money instead to keep the engines of economic growth going here. But the problem that they face is that the problems aren't related to that. They had ongoing ones, yes, of slow growth, but until the pandemic settles down, we won't see economic growth recover in the euro area. Thank you.